Good morning, everybody, and welcome to the Trade Talk podcast. Today, in the first half of the day, market will wait for the outcome from the credit policy, even though the expectations is of status quo stance. With the policy amid the second COVID-19 wave and fresh restrictions, build-up of inflationary pressures, and rising bond yields, the RBI's announcement would be closely watched to see as to how it would support economic growth, control inflation, and manage the government's sizable borrowing amid rising yields along with the higher demand for credit from the private sector. Today, we need to see that whether the market sustains above the level of 14,600 or not, which is crucial after the announcement of the policy. Yesterday was the frustrating and toughest day for traders, and if we calculate the intraday variation, then Nifty and Sensex moved up and down between the broader uh, variation range of 720 points. I mean to say, if we calculate the intraday variation, then it was around 700 points, and which is the toughest one for any trader to manage. On a daily basis, the market has formed an indecisive pattern, and based on that, the upward activity is not ruled out. The reason is because the market went down to the levels of 14,570, 580, but from there all the way it recovered back to the levels of 14,680 again towards closing. So if we see the data of last 2 days, then whenever the market has fallen below the levels of 14,600, it recovered back and closed above the level of 14,650, which is equilibrium level for the market of last 20 days, and which is positive. So it is indicating us that we are heading upward. On that basis, the levels of 14,790, which was yesterday's highest level, and 14,820 will be important crucial resistance for the market. If the level of 14,820 is decisively crossed, the Nifty can jump to the levels of 14,900, 950. But in case if we see the market sustains below 14,650 after the announcement of the policy, then in that case we may see further more weakness, and at any given point of time, the market should not break the level of 14,540, where there is huge amount of open interest is lined up. Today again we need to see that whether the market is uh, supporting or giving some weightage to the bank sector or not. Bank Nifty is also trading in the range of 32,250 on the downside and 32,700 on the higher side. So till the Bank Nifty is not crossing these levels, we are going to see range bound activity. Expect sideways activity for banks, but yes, if there is a medium to long term view, then certainly we should look for adding few financials to our positional portfolio, because most of them are available at their important support areas. Finally, if we go through with the FIs figure, then they were like net seller yesterday also to the tune of 1000 crores, and domestic institutions were buyer. But dollar index, which was around 93 2030, is now at 9230, 9235, which is certainly positive for emerging markets. Bond yield, which was around 1.75, is now at 1.65, and crude is also quoting at 62. It is failing to sustain above the level of 65. So these are the strong tailwinds for emerging markets, especially for Indian markets. And based on that, if based on that, our strategy should be to look for adding long position if there is any correction in the in next few days. Pharma stocks should do well because there also some specific news flow, but in that particular space, we are specifically bullish on Cipla, Sun Pharma, as well as Aurobindo Pharma. From the Tata Group, number of stocks are doing well, but specifically Tata Power, Tata Chemicals, and Tata Consumer should be on the watch list, because the delivery based volume from these particular stocks are quite encouraging, and that is why we are going to focus on Tata Power as well as Tata Chemicals and Tata Consumer for next few days, and the strategy should be to look for adding them at support areas. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening in, and have a great day to all of you.